Right, thank you very much for joining us this afternoon. We're going to be doing the webinar for Buy-to-Let, the Landlord Experience. So first of all, what I'd like to do is introduce myself. My name's Louise Appollonio. I'm the National Account Manager at the Mortgage Lender, and I am also the Account Manager for TFC Home Loans here in Manchester. So what we'll do today is just cover off in this webinar, looking at the buy-to-let market, really, the influences and impacts on the sector, and delve into details that really matter to landlords and yourselves as brokers. So the areas that we'll cover will be trends within the buy-to-let market space, increasing government intervention, buy-to-let chasing yield, the landlord experience, and also just how we can help at the Mortgage Lender and also the team here at the Finance Centre. So the buy-to-let landlords have had a pretty few tough years, really, regarding stamp duty changes. These stamp duty changes have made high-value, lower-yielding properties in London and the South East less attractive, and also the phasing out of mortgage interest rate relief has really eaten into profits on leveraged portfolios. Added to the tax changes, more stringent underwriting criteria and a ban on passing on letting agent fees to tenants has added to landlord woes. It's therefore not surprising the latest figures from the Ministry of Housing, Communities and Local Government show around 3,800 buy-to-let properties are being sold every single month. The icing on the cake for buy-to-let landlords is obviously Brexit, with the election looming this week, uncertainty and the latest dictate from the government over Section 21 notices that's likely to make it even harder for landlords to evict tenants. The lowest year's growth was in London, where prices fell by 1.4% over the year to August 2019, followed by the South East, where prices fell by 0.6% over the year. Let's just have a little look at government intervention. So this section, we'll review some of the regulatory changes that have been shaping the buy-to-let marketplace and also affecting buy-to-let landlords. The first area we'll cover is stamp duty. So in April 2016, the government introduced a 3% stamp duty surcharge on second properties, which was increased transaction costs for buy-to-let investors. The impact of this change has been marked now, and in 2016, the number of mortgages for house purchase dropped by 13%. This was followed by 27% in 2017 and a further 11.5% fall in 2018. The surcharge added to the regular rate of stamp duty land tax, which ranges from around 2% for properties worth up to 250,000 and 12% for properties worth over 1.5 million. So the second area we'll look at is mortgage interest tax relief. So before 2017, buy-to-let landlords could offset the full cost of their mortgage interest payments against their tax bill. Since April 2017, landlords have been able to deduct the full amount of their mortgage interest payments from their tax bills, with the available deduction gradually reducing during 2020, where a 20% flat rate of relief will apply. And as a result of this, many landlords have been facing significant increases in their tax bills as a shift from taxation on rental profit is replaced by tax on gross income. Okay, so Section 21 notices. In April this year, the government signalled its intention to change the existing Section 21 notice, which landlords use currently to give 2 months' notice to their tenants. They will seek that they are going to seek possession of the property, provided it is outside the fixed term of tenancy and they don't have to provide a reason. If the tenant doesn't leave, the landlord is then guaranteed a possession order if they take the case to court, and provided they have completed the necessary paperwork correctly. In the future, landlords will have to use Section 8 process and will only be allowed to seek possession of their property under certain grounds, mainly where the tenancy agreement has been breached. The landlords are rightly concerned about this. The Section 8 process generally takes longer than the Section 21 process, and it could also restrict landlords' ability to manage their portfolios effectively, as a balance in the relationship between tenant and landlords could become biased in a tenant's favour. The government will need to pass this legislation in Parliament to bring about these changes, but they have indicated they would do this as soon as possible. Tenant Fees Act 2019. So from the 1st of June, the Tenant Fees Act 2019 came into force, which restricts the fees letting agents and landlords can charge a tenant. It also puts limits on acceptable charges for some of the more regular transactions that form part of the residential tenancy. The changes have been introduced because of the application fees charged by letting agencies and or landlords to carry out basic checks on a tenant before they agree to the tenancy. The cost of checks, which include the right to rent, identity verification, credit file information and references, will now fall into the landlord's hands, something that could lead to increased rental amounts. Increased oversight. So, in addition to all of these changes, landlords have a whole host of certificates, licenses and GDPR responsibilities that they also need to adhere to. So again, some of these include the right to rent, the energy performance certificates, GDPR, HMO licenses if they're applicable, electrical, gas and fire safety, as well as housing, health and safety rating systems. Despite all of these changes though, last year in our special report, The Buy-to-Let Economy, we found that the demand for private rented accommodation is likely to remain strong for the foreseeable future. Focus does appear to be changing now as investors are turning to cheaper, higher yielding properties, which we are seeing reflected in the statistics with moves away from the London and South East. We've now started to see lots of investors who have a presence in locations such as Manchester, Leeds, Sheffield and Nottingham as they look to further diversify their portfolios. The latest report from Totally Money, looking at the buy-to-let yield map, shows that Liverpool, Falkirk and Glasgow are some of the top performers at the moment, with London, Reading and Guildford being the worst performing areas. So within this same study, we also looked at just 10 issues that keep landlords awake at night, I suppose, the things that they tend to be worrying about. So these are now up on the screen. So looking at property maintenance, the care of property, the behaviour of the tenant, taxation, the cost now versus the rental income, landlord regulation and council checks, collecting the rent from the tenant, finding tenants for the property, general property prices and also market conditions. So earlier this year, as part of the Buy-to-Let campaign, we did ask a sample of 100 landlords a series of different questions that relate to their experiences from being involved in the buy-to-let sector. So here on the screen now are just a few of the highlights to take away from those questions. So looking at these, 1 in 10 landlords are now using a limited company structure for their investments. 84% of landlords are looking to maintain or increase the number of properties that they have over the next 12 months. So there is still growth within the market. Half of landlords agree that tax changes have reduced the number of private landlords, while a third think the changes have increased rents. Only 15% of landlords are seeking out specialist tax advice about their rental properties. And also, of those landlords using a mortgage to purchase their buy-to-let properties, 42% are using a specialist buy-to-let mortgage broker. So I've covered off a little bit about the market, I suppose what we've seen over the last few years, what we've got to come, particularly over next year. And what I want to do now is just talk about how us at the Mortgage Lender and obviously the team here at TFC Home Loans can help with those buy-to-let or those specialist buy-to-let applications. Okay, so as you'll know, if you've used TFC, or for those that may not have used TFC Home Loans, they have a whole host of buy-to-let, particularly buy-to-let lenders on their panel that you can get access to through the team here. So just some of the areas that I want to cover off for us that will also hopefully help your clients is we don't have a minimum income. So we are in a position at the moment where some lenders will still have a requirement for income for landlords. We don't have a minimum, so it just means that we're opening out opportunities for those landlords that may, for whatever reason, have a lower income. The income can come from employment, self-employment, or they can just purely be a professional landlord. As long as we can see that there is some earned income on the application, then that's absolutely fine for us. We've seen from the previous slides that a lot of landlords are looking up in the north of the country for better yields. Our minimum property valuation is 50,000 for a standard property, which does help with those moves up into the north for those high yield properties. We do have slight minimum value for those properties in the southeast London, and also if the property is a HMO or multi-unit block. We can accommodate applicants that are up to 80 at application. So again, applicants who are looking to either purchase or remortgage up to that age is absolutely fine. And we do have a range of products, all up to 80% LTV, which includes your standard individual, your limited company buy-to-let, and also your HMO or multi-unit block. We don't limit the amount of properties within the portfolio. So there are clients at the moment that you may have who have large portfolios in the background. So with us, we don't limit that number of properties in that background, but also we can help with those higher LTV properties. So again, there are some restrictions dependent on lender of that overall aggregate LTV across the portfolio, but those higher LTVs is something that we can help with. So overall, the LTV can be up to 80%, but we can also look to help clients where that LTV sits higher than 80%. Generally, what we say with that is to pick up with the guys here at TFC, talk the case through, and they'll be able to then present the different options for you. Also within the buy-to-let, we'll allow a gifted deposit, so that could come in the form of gifted equity, or it could come in the form of actual a cash deposit from a family member. So that is something that we can also help with on the buy-to-let product range. Okay, so we'll lend up to 2 million to individuals and limited companies in terms of maximum loan amounts. Full details of all the LTVs and maximum loans can be discussed with the guys here at TFC. We'll also allow within that day one remortgages as well. So if you have clients that have bought the property with cash, maybe they've taken a bridge, we can support the remortgage of that property within 6 months. Another area that we have a lot of flexibility on, and I know the guys here at TFC will talk to you about this, is properties above or next to commercial premises. So again, particularly in the buy-to-let space, there will be lots of properties where they are above some kind of commercial unit, whether that be a shop, whether it be some kind of restaurant, even a pub. We've been able to accommodate up to 75% LTV on those types of properties, again in a market where usually the LTVs around properties where there's any kind of commercial premises close, usually the LTVs are lower than that, so you've got the option up to 75%. Again, with that, a quick referral in to see where the property is and exactly what's around that property is the best thing to do really, and you'll be able to get a quick answer of whether it's something that TFC can help with. Okay, we also earlier this year launched with eTech, so fully integrated with the eTech systems. For those brokers out there that have got clients with large portfolios, this is a great system to be able to upload all of the property portfolio details, and you can then speak directly to certain lenders in terms of submitting that portfolio rather than duplicating work along the process. Okay, our head office is actually up in Scotland, so we've always lent up in Scotland and naturally England and Wales as well. Recently, so earlier this year, we launched into the expat space for buy-to-let mortgages. So again, there are slight differences on the expat element in terms of criteria. So some of the criteria I've just gone through on our core buy-to-let does differ, but the main difference really is that there is a minimum income for an expat buy-to-let mortgage. So we are looking for a minimum threshold for employed and self-employed applicants. So again, if you have any expat buy-to-let cases and you need some support on those, give the new business team here at TFC a call and they'll be able to help with any of those kind of cases. So what I'll do now is just look at a few case studies. So these are actual cases that have come into us. and have now completed. So the first one was 10 remortgages to give the professional landlord capital growth for their portfolio. So these particular clients, should I say, there was 122 properties within the portfolio, and what they wanted to do was raise 400,000 across that portfolio to further grow the portfolio itself. So 10 properties, which was a mix of 2 and 3 bedroom terraced houses and semi-detached houses in the south of the country. Total borrowing of 2 million at 75% across the 10 properties. The capital moved a step closer to got them to their next investment, and all 10 properties were granted on a 5-year fix with us with an initial rate of 3.59%. The second case study, again, I touched on before in terms of allowing gifted deposit. This was a family gift. It was a wealth manager who was looking to increase the portfolio to buy 4 to 7 properties. He was given a gift and also was using personal savings to buy 3 new build properties, so taking that initial portfolio that he had from 4 to 7. And again, it was something we will be able to help with in a limited company name, with the rate starting at 3.65%, and that was also a 5-year fixed rate. I just wanted to finish the presentation by saying thank you for joining this afternoon. I'm sure you're all very busy. We do appreciate you logging in and listening to the webinar. I'm hoping that you've taken something away from today, whether it be about the market, the changes that have happened, and also changes that we're looking to in the future. And also, you know, how particularly we can help, but also the team here at TFC Home Loans. We do have an on-site underwriter here based 5 days a week. I know there's other on-site underwriters from other lenders, so there is a real wealth of knowledge within the office. So any kind of queries or cases that you've got, you just need to discuss through with somebody, then give the new business team a call and they'll be able to help in terms of any queries that you've got. So at this point, again, thank you very much for listening, and I would like to open out to any questions that anybody has. But I've had a question here from Sarah. Do you have more larger landlord clients or smaller portfolios coming into you at the moment? That's a really good question. We have a real range of portfolio cases that come into us. Because we don't have the limit, naturally that does attract larger portfolios that come in. But we do also accommodate, there's no minimum properties in the background. And actually as a lender, if an application, they have 3 mortgaged buy-to-lets and the transaction will be their 4th, we don't actually class them as a portfolio landlord. So all the additional checks and documentation that comes in isn't required. So there isn't really kind of an answer to that, because we get such a diverse amount of portfolio cases, like I said, ranging from just a few properties right up to, I think the largest portfolio was in the 300s, which was, as you can imagine, quite a bit of work to submit that case. Hopefully that's answered that question for you, Sarah. So I've got another one here from Tom. Can you confirm that there are no restrictions to the amount of properties held in the client's portfolio? No, absolutely not. So if it's in the background, there's no restrictions at all to the amount of properties. Now with us as a lender, you can build up a portfolio as well. So currently our criteria is that you can have up to 10 properties with a value of 2.5 million. Now that value, again, if you've got a case where there is a higher value than 2.5, it's something that you could pick up here with the team at TFC. But no, if it's a background portfolio, there's no restriction at all in terms of the amount of properties. Also, I've got another one again from Tom here, which is minimum value is 50,000. Yes, that's correct. If it's a standard property, the minimum valuation is 50,000. Now, the only difference to that is if the property is located within London and the South East. If it is, then there is a minimum valuation of 120,000. That also applies if the property is a HMO or multi-unit block. And the only other difference where we have a minimum valuation is when I've discussed about properties above or next to commercial premises, we just ask if there's a minimum property valuation of 150,000. Now, again, we do like to work flexibly. So if you've got a property and it doesn't quite meet those thresholds, particularly if it's something above commercial, but it's not far off that 150,000, then again, please pick up with the team here at TFC. They can refer the details quite easily into Katie, who's the on-site underwriter here, and it's sometimes an exception that can be made depending on the case itself. Okay, I've got another question here from Laura. Are you seeing more landlords moving to limited company due to tax changes? We are seeing an increase of limited company business into the mortgage lender. That has taken a while. We did launch our buy-to-let proposition around 18 months ago, and initially we were seeing lots of standard individual cases still coming to us, but over recent months, yes, we have started to see a move into limited company due to the tax changes, and we expect that to continue as we move into the next year as well with those changes. Right, I've got another question here, just bear with me. Are there restrictions to the LTV when a property is above commercial? So like I just mentioned, we do restrict the value to 150,000, and generally we'll go up to 75% if the property is above or next to commercial premises as well. So again, we don't usually exceed that 75% LTV. That usually is the absolute cap. There may be occasions, dependent on what it is, that we can look to, we'll look to work with you, but generally the highest LTV that we'll allow is 75%. I hope that's answered everybody's question.